Good morning, everyone. It's January 10th, and it's still freezing outside, and round two has just been processed. I know I was supposed to process round two last night at 11 p.m., but there were two teams who didn't start or work on the simulation, so I was going to give them a little extra time. And then I fell asleep, so I just processed it this morning. So sorry for the delay if you were checking your results. I have here on the Blackboard under assignments, these are the processing schedule, and I'm going to stick to that pretty closely. So if you don't start or complete your round, I'm just going to force you forward. There are two teams that I had to force forward in our class this morning because they didn't complete the round. And one team had like 4 team members, so everyone forgot, I guess. Well, that's not a good thing to do because when I force you forward, it takes whatever your decisions were in the previous round and moves them to the current round. So you've sort of fell behind. So everyone, please be very... set alerts on your phone to the processing dates of the simulation so you don't miss a round because it's not good for your score at all. So let's review the results. Now, when I do force a team forward because they don't complete the simulation, I actually go into their game to see what they did. Now, in some cases, maybe they just forgot to submit, but they entered in all of their work. In that case, I will go and submit it for them. But in the two cases, the two teams that didn't submit, I went in and I saw that nothing was done. Nothing was filled in. So they completely forgot. So and I always double check to verify to make sure it's not a problem with the simulation or the game or the data entry or to, verify that nothing was done. So be very careful of this. Don't forget to complete your round before the processing. And according to Blackboard, the next round is going to process on the 14th. And the 14th is a Wednesday. So you have to Wednesday. Let's look at the results. Okay, so I'm going to look at the industry charts here for round two. And I see that, okay, so the profits for round two, that's year one. Points per, let's see, why isn't this, hold on. Sorry about that. A good note that once you complete your round has been processed, always log out of the simulation and then log back in, before you start the next round. So if you complete your round and then I process the round, make sure you haven't left your screen open or your system. You need to always log out and log back in, and that's what I had to do because it wasn't displaying year two charts. And that little fix, log out, log back in, seemed to fix it. So here we have the side-by-side comparison. And you can see that profits are better. So last round, year one, we had the highest profits of about 60. And J&R Auto now has almost 100 million in profits. So they're still doing very well. I had a very good question from a student that asked, how are some teams doing better than me when their features of their car are not as high as my features and their prices of their car are higher than the prices of my car? So the simple answer is advertising. If you advertise more and have a more effective advertising strategy, you're following the student user guide as far as what's more effective in advertising, you will get more demand. Also, if some teams have really great cars, they have good demand, but they don't manufacture enough cars, and they have more demand than the cars they made, then that demand is going to go to the next. It's going to be allocated to the rest of the industry. So if you make a car that 5,000 people want to buy, but you only made 3,000 vehicles, so there's 2,000 vehicles with unmet demand, other teams who made cars that weren't as good as yours are going to get that demand. So sometimes it's not all about making the best car. It's about producing enough cars to meet your demand so other companies don't steal away your customers, and also having a better advertising strategy. And those things are very real in the auto industry as well. Okay, moving to points. Okay, so this team here, remember they had negative points, and now they have they're up 1,000 points. The great thing about this game is if you forget to do a round or you do poorly in one round, you can make up a lot of those points the next round. Now they're still behind because a lot of teams are probably at 1,500, 1,600 points, so they're still behind, but you can come back strong after a weak round. You really won't make up everything you lost, but you won't get into a position where you've lost the game. So this company, it's just a situation where they had a late start and they were able to study up, and now they rebounded, and I'm very happy to see that. Everybody else, it's very typical for most teams to do very well in points in round one because you're coming off of improvements from very poor management. In year zero, the management was very poor. They were fired. You were hired. You made a lot of smart moves, and you earned a lot of easy points in round one. Now, round two, you're competing with yourself. It's a year-over-year analysis. So you're competing with yourself. So if you did very well in round one, it's going to be hard to top yourself in round two. Not impossible. So some companies may struggle in round two as far as getting the same level of points. So I kind of think in round two, if you can get 400 points or better, you're doing well. So remember what I had said. I had sent out an email about, with a couple of YouTube videos on the simulation. I sent out an email with some suggested tips on how to do well in the simulation. This simulation, you do have to put some effort into it to do well. And to continue to do well, it's very simple. You have to increase your profit margins to maximize shareholders' wealth. And the way you do that, increase prices, reduce features, effective advertising, effective operational investments. Now, if you make enough operational investments, you can actually start, increasing your features and decreasing your price and still making a better profit. Now that puts the demand on your cars even higher. So there's some point that if you're making the right moves, you can actually start increasing your features, decreasing your price, capturing a bigger percentage of the market, and making a lion's share of the profit. So, it's once you're at an efficient point, you really want to start increasing your features to get more market demand. But you can't increase your features until you have a lower cost manufacturing model, and you have to do that on an operational page by making operational investments, which I had said multiple times. I've said this. All right. So we'll see here that J&R Auto, again, continues to advance strongly in stock price based on their high earnings, and because they're maximizing the wealth of their shareholders the best, and that's why their stock price is going up. Now, they may not have the best cars, but they certainly have the best forecasting and the best advertising and pricing strategy to maximize their profits. Companies don't maximize their profits by making the car with the most features and the lowest price. That's how you maximize your losses. You want to have an equilibrium, a balance where you're pricing it at a profit and you're meeting the customer's expectations, but you don't necessarily have to exceed their expectations to get them to purchase the vehicle, especially when there's advertising involved. I mean, if it wasn't for advertising, nobody would go to McDonald's because their food is horrible for you and mostly doesn't, it's just terrible. Now, some of it, I do admit, some of McDonald's food does taste really good, so they're going to have some sales. But what's the excuse for Burger King? Their food tastes terrible and is terrible for you, but yet they're number two and sell millions of dollars of food. It's the advertising. So advertising, look at the Kia Soul. Now, this is an inferior car. It's a terrible car, but they got dancing hamsters, so you just have to buy it. I mean, advertising, come on, they're dancing hamsters. Well, how could I not buy that car? Well, that's how the American public thinks. So there's your explanation. Okay, so you can see here, this was a team that they didn't really do well the first year because they didn't have time, I guess, to they came into the class late, but they certainly rebounded. They had the biggest trajectory up in their sales because the great thing about this simulation is that you can correct your course. So there's two teams that had to force forward because they forgot to complete the round. They've done poorly. These are the two teams here. You can see how their sales are flat. So they just had the same results same input as round one, but they can bounce back the next round. So if they didn't do so well this round, they can make most of their points back next round. But they're still going to be a round behind on their operational investments, and and that can hurt them somewhat. The same thing with earnings per share. We see a similar thing with earnings per share here. Now, most of the pack is in this area, so this is sort of like the normal distribution here, and we have a couple of outliers. So you want to make sure that you're maximizing your profits. And the thing with this, you are expected to maximize and increase your profits every year. You have to have higher profit margins, more gross profits, and that's, to be expected every year. And if you don't do that, if you just come in at the same results and everybody else is moving forward, they're not going to appreciate your company as much. Okay, so that's the review. Now, remember that marketing plays a key role in the simulation. So you need to look at the marketing charts to get an idea of who is marketing the most and what are they spending. And you may not get the exact mix of how they're marketing, which is a strategy. Your marketing mix is your own strategy. Because if nobody puts any money in, say, radio advertising, and one company spends $10 there, they'll pick up all the demand that would be in the radio advertising. Maybe it's 5% of the marketplace, but that's 5% of sales you're giving up if you don't place any money. So whoever has the most money spent in radio advertising gets the highest percentage of those sales. So it's a pretty simple math of how the advertising works. And you can see that, oh, look, the number one company in sales, oh my God, they have the number one, the number two actually in advertising. So they advertise, that's how they picked up so many more sales. And those sales translated into profits because their cars were priced and built correctly to generate profits, and they advertised to get more sales. So, hello, this is what happens in the real world. People advertise products and they sell, even if they're not the best. You may not know. Let me just tell you, Beats is not the best headphones, but they sell the best. Why? Because of the advertising. There are other manufacturers that make far superior sounding headphones for less, but you don't know about them because they're not advertised as much. So that's so again, you got to look at these car companies. Most people are advertising around the same amount. So you're going to have all similar results. Some people are over. Now, if you do advertise, there is a danger of over-advertising, and then you're spending all the money that you're making in profits in advertising. That's not smart. So you don't want to over-advertise. You want to figure out how much money you're advertising. Say you're advertising $4 million worth of advertising. You got to look at your projected profits for your product. How much profits are your selling your car is going to make. If you're only going to make $5 million profit on selling your car, then the $4 million advertising is going to eat up $4 of that $5 million. You're only making $1 million. So you got to really balance it and think smart when you make these decisions and kind of investigate a little bit. Don't just put money in advertising and not figure out what your advertising budget is, how much you're spending in advertising is compared to how many profits you're going to make on your vehicles. You want to make sure that you're not decreasing all of your profits. Okay. So you can see here in sedan, J&R Auto actually has the highest advertising in sedan, and not in truck. Let's see. And they're actually pretty much first or second in most categories. Okay, so advertising is a key thing in this game, as it is in the real world. Advertising is very important. Okay, so let's look at something else here first. Okay, so this is my practice game, and I use the practice game to kind of help diagnose questions or problems of the simulation when I'm playing it, and I've played a simulation a fair amount of times. So I'm in practice round year 3, and this is something that you could do in the simulation is, you can go back to your practice rounds and you actually can reset. I already have checked that everyone did their practice round. So you can actually reset back to round 1 and then run it back, do round 1 over, similar to what you did in a team competition, do round 2 over, and then get to round 3 and kind of put in like sort of a scenario model of what you want to do in the real simulation. You can actually test out in the practice simulation and see how your results are. So let's look at my results from practice round year 2 before I go into year 3. Okay, so I increased my revenues by 35%. I got 35 points. I increased my debt ratio. I decreased my debt ratios, and that gave me points. My profit margins only went up by, my gross profit margin went up by 1%, so only 1 point. And then my operational went down by 1% because I spent more in advertising, and my net profit was down by 1%, rounded up. So I kind of lost money. I lost points in my gross profit, percentages, not gross, my operational and net. And that translated to very poor losing points in my asset turnover, my equity multiplier, my return on equity, my assets per share, return on assets, because these all work on profits. So if my profits are poor, I'm going to lose a lot of points. That's why I say maximizing your profits is key for this game, and it's also key to keeping your job in the real world. So my earnings per share went up, mostly because my sales went up, but I didn't do very well. My forecasting was poor on 2 of my cars, although it was better on my truck and luxury. And I had a surprise deficit because I didn't sell everything that I had forecasted. So I lost 100 points there. But I think the one thing I did right is I made some operational investments. So let me actually go. There is this assessment thing here, and I could see, some things I'm doing well. And if I'm not doing well in something, they actually have hints. So I can kind of, if I'm not doing well, I can look at these hints. And even in total points, it kind of show me how I'm doing. Now, the total points, I don't think this is really valid until the end of the simulation. So you don't pay attention to the very end of the simulation. So, and of course, I can look. The most important thing is I want to look at my performance charts and see, how I'm doing. And now this is a growth industry, so I'm growing, but I'm not growing as fast as the rest of the industry, and that's why I'm losing points. And I can see here that I should have. I did well. I under forecasted my economy. I sold all the economy cars I made, which was good. But I may have built too many of them, and I have excess inventory. That's probably why I have a deficit. Here, my demand was 3,000. My demand was 3,199, but I actually only sold 3,000. My truck actually did pretty well in my truck. Luxury was the only problem. I only built 1,750, but I could have sold 2,389. So that's where it really fell down. So my forecasting was bad, and I think that really hurt me. So it's key to look at that when you're going over your round. And in the industry, I'm playing against a computer player, so I can kind of look to see, the computer player profit margins are closer to 50%, and I was more in the 40% range for some of my cars. So I'm falling behind on profit margins. It's around 3, and I'm still in the 40 percentile area of profit margins, which isn't good. Here are my backed up financials. So let's go into sales. I have to redesign my car. But luckily, I spent pretty decently in operational investments, so I have a nice cost reduction. So I can actually, even though the customer expectations have increased, I can meet them, or I could at least meet them. I should probably, since this is more important, let me go higher on that. I can actually go over or under. So let me just see, and I try with a high price. Okay, so 25.14. So this is a 44%. So I'm going to go back to industry. What was my profit margin last round on the economy? And it was 42. So I need to do better than 42%. 47, 52, and 49, which is my results from last round. So I did do better a little bit. I guess it's hard with the economy class. I need to put more operational investments. So I'm gonna move forward, and oops. I guess some of these items you can't go too low because the car won't work, I guess. So now here I have 2,400 in cost reductions, so that's going to help me get a higher profit margin than I had last round. Okay, and I'm going to increase my forecast, and I guess I should increase my forecast here. And I'm going to make a So, and I'm doing this really quick, so I don't have time to study everything. But you should spend definitely more time looking into the competition and how to. I'm just making sure that I am building cars that have higher profit margins than the previous round. And that's sort of what these reflective observations are here. Even though we're not doing it for our simulation, these reflective observations are making you think about, how did you do last round? Are you going to redesign? How is this going to help you improve? So these reflective observations, I do suggest you read them and think about them, because they do help you to perform better, and they do help you, think about what's important in the game. They focus you in on where you're thinking, where your strategy should be. Okay, so advertising. Let me go back to the charts and see the marketing charts. Okay, so let's see, what color am I? I am, okay, so you see here, I had the lowest amount of advertising, and that really hurt me on my sales, and that's why I think I was pretty much in last place. And other teams are advertising a 2 million, 2 million more. So the computer is advertising. I'm under advertising, and I think that's definitely hurting me in the simulation. So in my marketing, I'm going to take that into account. And luckily, I do have this range here that gives me an idea of what the industry is expected to spend. And this is good because this is dynamic. So if everybody in the industry keeps spending more and more and more, this range will keep increasing bigger and bigger and bigger to reflect that. It's sort of a race. Advertising is a race. The more you advertise, the more profits more sales you will have. But if more people advertise more, then you have to advertise even more to get ahead of them to get the market demand you're used to. So it's sort of this really vicious cycle that can get out of control. But I think in the beginning, a few teams capitalized on advertising a lot more than other teams had realized, and pulled ahead quite significantly. So I think moving forward, advertising is going to be a lot more critical. This is what really matters here, this area here, how you lay out your spending on each of the areas, to kind of coincide with the student user guide has a chart on which is most effective for each car as far as how your marketing mix and how you advertise. Okay, I'm going to move ahead. I'm going to fill this in later. It takes a while to fill this in, so I'm just going to move ahead to production, and I'll fill this in behind the scenes. Okay, so now I'm in production for year 3, and I see that I need to buy some extra plants here and here. And there's the excess inventory. This is what caused me to have a deficit. I had almost 500 cars, at $20,000 a piece. There's a lot of sales and profits not to generate, and that's why I had an unexpected deficit, and that led me to lose 100 points. Now, this round, I'm not going to make that same mistake. I'm going to keep enough profits in my surplus, enough cash in my surplus to, even if I don't sell everything that I forecast, that I still won't lose those 100 points. So I'm going to put my forecast in. Now, I don't want to have any excess or shortage when I'm forecasting, because that is only going to lead to a confusing pro forma financial statement. So if I'm building if I have excess, that means I'm building inventory. And inventory that doesn't get sold is going to put a drag on the company and consume cash. When you increase your inventories, you consume cash, and that can lead to deficits. So when I'm going to sell my inventory here, I'm going to pick up extra cash. So try to make this 0 here as the best result. And I'm going to increase my operational spending, like I'm telling everyone in class, to So okay, so I'm going to spend some decent money here. Okay. All right, so I'm going to pack that in. And again, read over these reflective observations. They're critical to understanding, some of the strategy here on this board. So I'm going to submit that. And now I'm here on the finance page when it loads. Okay, so first thing I'm going to do is go right to the bottom and see that I have a $46 million surplus. Now that is terrific. So I have some extra money. I think I'm gonna pay down some debt, because this will help with my scores too. My debt ratios will help me get some extra scores on my overview page next round as I'm paying down debt. And I'm also going to buy back some stock. So buying back stock helps to reduce the amount of outstanding shares. So here I'm reducing my outstanding shares, and that's going to help additionally boost up all my per share statistics. So anything that's a per share statistic, if I reduce my outstanding shares, all my per share statistics are going to improve. So buying back stock, in the beginning, you may have to sell stock to kind of fund the company that you need. You're going to have to borrow money, additional funds. You're going to have to sell stock to get to where you need to be in round 1 and even in round 2. By round 3, you should be making enough money that you could start retiring some stock and some funds, and this is going to help your score greatly. But just got to make sure that you have, at least $20 million in cash surplus. Here, I'm not taking any chances. I'm going to leave $30 million. So I'm going to go now and process round 3 and see what my results. Remember, this is the individual practice, so not as hard as the team competition because you're playing against a very smart group of MBA students. But here, let's see if I can hopefully beat the computer. So I'm going to run. Let's see what my results are. Any day now. Okay. Okay, so 400 and I had a deficit again. I guess I didn't leave enough money. I probably over forecasted. See, here's the problem when you don't spend a lot of time researching and thinking about your forecast, and you may tend to. I probably over forecasted my sedans, I would guess. So here I made points by increasing revenue, decreasing my debt, increasing my profit margins. I increased my profit margins, and I had earned nice points on that. Plus most of my other per share statistics on my return on assets and equity and earnings per share. I increased my market capitalization, which is stock price times outstanding shares, and my book value. Let's see. Yep, my forecast was poor on sedan and truck. So those two things I think hurt me. And I had a deficit. But 470 points, I think we have 6 rounds. So making over between 400 and 500 points each round is enough to kind of get you that A. So I'm not disappointed in my results here. I just have to be a little bit, it makes sense. I wasn't that careful I did this quickly. I wasn't able to look much up. But let's just go to the production page and we'll see that, yeah, I had 700 sedans unsold and 700 trucks unsold. And that's what ate up And now I could easily have avoided that if I looked at what the potential was, the market potential was. I just didn't look at the user guide, which is really key. And the user guide could always be found at the bottom of any of the pages, is the student user guide. And if I look in the student user guide, I see here that round 3, sedan is, this chart is basically if everyone was equal, what you could expect as far as your share of the market if every car was the same exact car. So I was over forecasted in both of these numbers. Mine was like 5,000 and 3,000. So it's no wonder that I have leftover. I didn't forecast carefully. So that's what happens. That's why it's good to look at that chart. Okay, so hopefully by me going through this example of round 3 and going over the simulation and just giving you my thoughts on it, you can do much better. Because remember, this simulation is really great because it's a experiential learning activity where you get to put in what you learned, all different aspects of business. There's a strategy for research, development, and sales, a strategy for marketing, a strategy for production, there's strategy for finance, and all together, that ties in all together to give you the total strategy of a company. And, if your strategy is superior, you're going to beat your competitors. And you need to outthink and outwit them and be ahead of them because they're going to look at your strategy from the previous year and try and copy it. But they're still going to be behind you if they only copy it. So people are great strategic people. They keep rethinking, re-innovating, and tweaking their strategy moving forward to stay ahead of the competition. And most things that I find in the simulation are very similar to my business experiences in working in various industries, from vitamins to semiconductors to defense industry, as far as how costs and production, advertising, profit maximization. I haven't really found anything in this simulation that doesn't mirror a lot of the real world problems and situations I encountered working my 15 years in the workforce as a financial manager for companies and as a cost accountant. And so I know that, to me, this seems very realistic to my work experiences, and mostly my work experience is mostly manufacturing, and this is what it's based on. So okay, this is my under 30-minute video of the results of round 2 and trying to help you to improve and move forward to in round 3. So I wish everybody the best of luck, and remember that the next round is due on January 14th at 11 p.m. Don't forget to do that. Don't make me have to force you forward. Okay, thank you, and have a great day. Talk to you soon.